Good morning. All right, here we go. I don't think there's anything can stop this market now. So look out. All right. Anyway, kind of joking aside, we had that. I'm going to show you on the futures. It's easier to see, but we started pre-market yesterday, and I was talking about the possibility of a breakout bar failure forming. And it was a small inside bar trading near the high of a wider range bar that broke out above. I think it was about 2 or 3 bars that were going sideways. I said, this is a setup that if it trades below, prices historically go lower. So like an early warning sign. It did exactly that. It finished the bar, the inside bar. It traded below the inside bar. And the market slowly ground lower, ever so slowly, and never broke in a big way, which is darn bullish. I really wasn't pointing to anything. Yeah, I was just kind of talking. Sometimes I like to talk. You don't see the chart? I see it up on YouTube. You should see the chart. The big old charts there of charts are fine. Okay. So I'm not talking about pattern from yesterday yet. I just brought up the transports here as I was looking at what was going on here pre-market. And the transports were the real winner yesterday, meaning, it's the concept of playing catch up. And they did exactly that. So last week, if you remember when the markets gapped higher, that was as far as they went. And then they started coming in. And the S&Ps and the Qs chopped sideways, and they tried to go down, I think, on Wednesday. And then they recovered on Thursday after there was some nice talk about, China trade stuff, blah, blah, blah. After Wednesday, China was like, oh, we don't believe Trump's going to do it. It was the schizo market. Anyway, and things recovered on Thursday. Actually, it turned out to be a bottoming tail bar in some of the other indices, but the transports, which had opened lower, rallied big. Right. Well, that was Friday. And then yesterday they continued to push up, and now they're coming up to the top of the trading range. So what we're looking for is the possibility, the transports breaking out of this trading range, which isn't going to be new all-time highs, but it's certainly a move in the right direction to finally break out of this trading range. Now, we'll take a look at these option traders. Yesterday they were like jumping all over themselves, to buy those call options. I mean, I think the put call ratio was down around 0.6. Someone mentioned it was even around maybe hit 0.5 something yesterday, which means there's an overwhelming amount of call options being bought versus put options. And that on a short-term basis is a concern, because the wrong way option traders, when they start moving to an extreme, buying too many calls versus puts or vice versa, the market has a tendency to either put a cap on it or put a floor under it if they're buying too many puts. So the markets didn't move up very much. They're up here pre-market, about where they were a little while ago. But we'll see how far they can get here today. But I'm a little concerned on a short-term basis, which could be, for a day, when these wrong way option traders start betting big that the markets are going to go higher. That historically it's not going to do it. And that's all we got to go on is historical norms. So we'll see what actually happens there. So one line in the sand is to keep an eye on what the transports are doing. A push up through here will be another bullish event, but another event to say, hey, just be a little careful here on a short-term basis. And that doesn't mean the market's going to crash, the way things are looking, unless some, China deal falls apart here, something like that. I think any correction at this point, I would say is buyable. looking for things to continue to be bullish into the end of the year. So we'll just have to step by step to see how that goes. Whether it's now, whether it's a year from now, or whenever, you're always going to have a better reward to risk buying pullbacks to support versus buying, breakouts above a trading range after it moved from support to get above it. Now, you have a belief that it's going to keep going based on multiple time frame analysis. You could put your toe in the water, right, with a big old stop, maybe like below that bottoming tail bar, share size it accordingly, that, for your maximum loss based on that, and you're all good. So just be smart about what you're doing there, right, as always. Look at the spiders, and you could see the gap up and just didn't go anywhere. And this was, I think, that bar pre-market where we talked about yesterday, where it kind of popped up and in the inside bar, and then it just kind of slowly drifted throughout the day. And as it dipped down, in yesterday on the 5-minute chart, it looked like a pretty decent drop, right, for a small time frame. And then buyers picked it up, and now here we go again, right, pre-market, and that was last night, and now it's just kind of drifting sideways there. So uptrend basing, right, bullish, we say that this is what's creating support, which theoretically could launch a move to the upside. And now we have to see if it can actually clear the top of the trading range, right? So we've got a little range there, and so if it can get above there, expect it to go higher. If it goes below here, maybe it goes down here to fill the gap, and we'll keep an eye on it. Remember, looking at the weekly, that's a nice move, right? After there's a giant bottoming tail bar, a nice move up and multiple bars up. Nothing says it can't have more than 4 or 5 or 6, but the more green bars going up in a row, the greater the potential for things to pull back to what was resistance to become support, which would be buyable, right? So nothing extremely bearish here at all. It's just that things are making a nice move, and now you get a gap up, gap up, gap up. Just common sense says, hey, if we get another gap up, we're probably going to get closer to some type of retracement. As an intraday trader, we can short that, right? Either shorting spiders or shorting futures, doing call credit spreads if you so wish. We've been doing much more of that. Thank you to Quick Draw McGraw in the room, who does a lot of those. And those have been very nice with 0 day to expiration, right, to be able to control risk. So that's a nice trade in of itself, but those are Monday, Wednesday, and Friday. Qs, see the little narrow body there, slowing momentum. And as you can see, there's the push up, and now it's just kind of drifting sideways. And it's only Tuesday, right? We have no idea what this bar is going to look like. Too many days to go, but we've got a gap up, and so far things are stalled. And just reasonable to think that, hey, stalling is okay, but does it pull back? Maybe this actually can go sideways for 2 or 3 days. And going sideways for 2 or 3 days, you see down here, these are the wrong way option traders, right? And they got it right? Christmas has come to these guys and gals where they're betting the market's going to go up, and it actually did it. I'd be curious to see, especially yesterday. I bet you, I don't know, we could look at this, Dan, just when things slow down, but I'd be curious to see if the call options that were bought yesterday actually could be losing money just because of time decay and how much they were inflated because of the gap up. So, that's something to consider, what options, but this very low number here, Right? Is it extreme? And the moving average is now starting to peekaboo up toward that bearish zone. And if you continue to go higher, obviously this is going to poke up. And now breadth is beginning to get closer to that bearish level. So everything looks wonderful, but you always got to keep an eye on the potential risk, especially if you start using leverage to start adding to positions, because that can cut in the other direction pretty quick. Looking at the futures, right, there's the S&Ps, and still early in the day, momentum slowing. There is that wide range bar we talked about yesterday. I think it was about 50 minutes left on that bar, and I said we'll see where it ends, and it traded below. But that's the bullish price action, is that when it started to roll over, right, it perked right back up again. And then another push. And now it's going sideways. So same story. Can clear the high and continue to push up maybe to a 3,100. Or if it breaks below here, well, maybe it's going to be a correction day and we have some intraday shorts. Nothing wrong with that. But uptrend weekly, uptrend on the daily. Let's make that green before we change that. Right. And ideally, pullbacks would stop at the top of those bars that went sideways, and then when it broke above, rather than come all the way back down to the swing. It's just such a bullish trend. And John in YouTube's mentioning a call credit spread, 0 days expiration tomorrow. Absolutely, John, especially if this was to go, if they went up today and then gapped up tomorrow, I think that would be a no-brainer. But we look for patterns that support a bias. So let's just, for this, let's take this 60-minute chart, for example, where we see this wide range bar. And prices got near the top of it, as you can see. So if prices were to break below the low of that wide range bar, then it would make sense to consider a call spread above this level, somewhere up here, with 0 days to expiration. I think, as I should always do when I look at something like that, we use the term a no-brainer, meaning, look, if I can find a call spread some distance up above this level that's going to expire by the end of the day, right, when prices are below here, I call it a no-brainer, meaning I look at it as being, and I'll use the term, take it from where it comes. Nothing's a guarantee, but guaranteed money. So we'll see. But, patterns are universal, and how to combine them in multiple time frames is the key. So Q's here, slowing down a little bit. Let's look at that on the 5-minute chart. It was just a little drop for whatever reason. I don't know if any news, but you can see the 5-minute chart. There's that wide range bar up, and prices have been trying to get through it and failing, and now they're breaking some support over here. YM holding up better, right? Bringing up the rear. We talked about this, about YM. That was the laggard, bringing up the rear, and now they're at new all-time highs. And I mentioned before, we need to see the transports start to join the party. The Russell holding up well here. And now that it's through this level, well, if it can get through yesterday's high, this may be the winner, meaning the one that truly outperforms. We spoke about that yesterday too, that this has the void. And in the room, we spoke about the small caps, some of the ETFs. You can see that this is up near the top of the range here, and maybe you can see the void that's up above here, so maybe not right now, meaning this week or next week. We'll see. Right? We're getting close to the end of the year, but hopefully things really kick in where they accelerate to the upside. And this is where you want to look. All right, what has underperformed that could really start to outperform, like the Russell and this mid cap could do really well. So you take a look at those, and let's keep going here. Oil starting to perk up. Oil stocks, you know, they got whippy last week, but now they're recovering. Look at the weekly chart of XLE. They had a great day yesterday. This was the whipsaw here, and some got it worse than others. You can look at XLE and XOP and OIH and whatever. You'll see what I mean. But this is now pushed up into this mini void, and so this looks like where it's going to play some catch up. So you could even look at some of the stocks that are within this sector too. And bonds are down exactly what we need to see, right, to support the markets. And they are into this little swing low here where they held, and there's another one right there. So when you got two swing lows that are right next to each other, it could just flip right into your face, right? It's not a good place to be shorting when you got two levels of support right next to each other. That's not historically a good setup to be thinking about shorting, but this is supportive to the markets. Now, on the other hand, when you look at a bar like this, a wide range bar like that, which I'm saying is supportive to the broader markets, where's the wide range bar over here? So in a sense, it's like the market is using one of its silver bullets, right, so to speak, that bonds are falling, and that's bullish for equities, and equities are just kind of like hanging out here. So I think that's a little bit of a concern. Gold getting knocked back down with this weekly chart. I just, it's, for me, that's a bullish chart. It's still consolidating. It's coming back down again, so bonds are coming down here and gold is coming. Equities are not doing anything, but look, I think it's worth the consideration to pick up some GLD or watch for a reversal here. This could be where you get the red bar turning into a green bar, and you see where the buyers have been stepping up here. So you wait for the momentum to slow down on a smaller time frame. See the arrow here, wide range bar. It's coming into support. Maybe it comes down here, and after 2 or 3 hours, it starts to curl up. So keep an eye on that. And silver's coming in the same way. It couldn't get through that level, and so we'll see how that all shapes up. So there you go. What time is it? I went a little bit over. Sorry, Dan. It's all yours. You can take over. Starbucks, Marlin, is sitting on some support there. I think it broke its 200, but it's right around there, as long as I remember. I don't have the moving average on there, but maybe Dan will take a look.
Starbucks. All right. Yeah, good morning. And folks, there's a couple of it. You can put your drop down to all panelists and attendees. Starbucks, that's on a nasty downtrend. Bullish gap negated, made a new low on the 200, stabilizing pre-market. Has room to fall on the weekly. I would just avoid it right now. I don't know if this low is going to hold. It's a mess. I don't like shorting things down 3 bars in a row, but maybe shorting a bounce. Let's look at all our opens are fine. Deer is up nicely, so we might sell a little bit more of that into strength. We sold 1/3 yesterday. Let's see if we can squeeze some more out of that. Looks good. All right, gappers, Yeti, 31.45. It's a bearish gap, maybe 30-minute low. Chug, 34 bucks. Oh, nice bullish gap over this entire shelf. That's a 30-minute high candidate. I'll put him here. I like it's holding pretty well pre-market. McGraw's mentioning Adobe. Yeah, I have it in my list. That's a big gap though, way up there. And my gosh, that trade's incredibly sloppy. That's just a total mess. You would have to trade longer time frames or maybe even just a line chart. USFD 4250, it's gap into resistance. Whiskey, I think it might have earnings coming up today or tomorrow or something, but remember we went core long this right on that gap day, bull flag, and then it stopped us out on this day. I don't know what the heck happened, but it's in a trading range now. So we gotta keep an eye on that. 30 gap in at 39 bucks. That was a nice gapper yesterday. Thursday, all right, thanks. I'll just delete them for now, put them back in later. ATHM, 78 bucks. Ooh, that's bearish. It's a big gap percentage wise, but that's bearish. Let's see, shorting a bounce on that. FLGT, never heard of this guy. Just gapping in the middle of the range, nothing to do. Look at Beyond. It's been in just a nasty death trend. But now, oh, that's still far away. Let me blow this up to the 15-minute. It's holding very well pre-market. Very well. 30-minute high. McGraw, this looks like a put spread for us for Friday under yesterday's low. Could also even set up for a day trade long. I wouldn't swing that daily pattern, but day trade and a put spreader, I'll consider. ZBH 141.50. Put spread idea. I like that it's gapping over all of this mess. So that's not bad. Deer we talked about. Fabio RNG. Gap into 171. Yeah, it's kind of an excessive gap near my target. So that's the problem I have with that. CCK 75.75. It's a bullish gap, but I don't like them when they get this far from the 20 and 50. Piton, yeah, one of you were mentioning this yesterday. It got very whippy into the close yesterday and then gapped up on earnings, and now it's down. So that's a big mess. Ever 2660. Wow, that's a big gap. That's gapping all-time highs. But no trade for us. Adobe we mentioned. HSIC. Oh, let me give you all this trade I gave pre-market. And I also raised the stop on a couple things. Deer. Greg mentioned this yesterday, and I like it. McGraw, what? On which one? On Piton into earnings? Oh, FIS. Oh wait, look at this beautiful thing. That is a no-brainer put spread. But I guess today it had earnings. But that's a beautiful. Let's put spread candidate. HSIC and Beyond. FIS 135. But yeah, that's a nice gap. That's a shock over the high of this red bar. So McGraw put spread candidate. Sure. All right, so here's TGX I like over the highs. This, one of you mentioned this in the room yesterday, and or after the market, whatever. And I said, yes, that was a no-brainer gap trade there. Over this red bar. That's beautiful. But now it's, tougher to get on board. But 15-minute high yesterday was a no-brainer. TPR, I like this when it was gapping up to 27 and change. Now it's gapping down, so I've lost interest in that for now. Region 324, it's a big gap. Nothing to do with it. NEM down on earnings with gold. Mylan, 20 bucks. I'll come back to it. ICPT. EMR. No pattern. BDX. This actually looks like a Condor. The 265s and the 245s. AMRN broke out but no entry. AFI, no pattern. Tandem, that's a call spread candidate.